What's going on, guys? Welcome back to the channel. Welcome back to another video. Today I want to talk about 4 or 5 things that I think will be determining factors, to my opinion, of why I think Bitcoin in 5, maybe 10 years at the most, a stretch, will not even be popular or even around anymore. Now, I know that's a strong thing, because a lot of people deal with Bitcoin, and they're investors, and everybody's saying it's the next greatest thing. But you got to look at it from this point of view. Number one, Bitcoin is not regulated, and banks are regulated. And then you got the fear factor where for almost, well, I ain't gonna say hundreds, but yeah, I guess hundreds of years, there's been a banking system with some type of coin or hard asset that you can hold in your hand, whether it's metal coins, dollar bills, paper money, whatever. Bitcoin is not even a physical thing, right? So that's one argument, and it has no regulations. So being that it's not regulated, banks wouldn't even want to mess with it, because there's just so much that can incur and so many problems and fraud that can ensue. A bank is not going to deal with that at all. That's number one. Number two is this: the volatility and the lack of transparency. Like I was just talking about the lack of transparency, where I was saying, okay, well, Bitcoin is not a physical item. It's just some numbers on paper or on a screen that can be transferred from computer to computer, right? And then the volatility thing of it. I mean, it can shoot up thousands of dollars in a day and then go back down. Now, I know there are people that say, oh, well, the dollar bill does that. It goes up by cents. It doesn't go up by hundreds, thousands of dollars a day. Impossible to track it. Could you imagine? Think about this. I'll get into it later on, but I'll just say this real quick. You're sitting down and you're trying to get a loan in Bitcoin, and you're sitting in there. They would have to have a television on in the doctor's office, in the bank. They would have to have a television in there where they're constantly monitoring the price of it. It's moving like gold, constantly moving, numbers constantly moving, right? Now, say they get a spike when they go and get the paperwork, and you fill the paperwork out, and you had already agreed, they had already agreed to give you $20,000 in Bitcoin, and it shoot up to 30,000 per Bitcoin. But they offered you one Bitcoin that was worth 20,000, so now it's worth 30. You think they're gonna give you the Bitcoin? It's too much problems. Banks don't want to deal with that. They don't want to deal with them type of problems. So that's number one: the volatility and lack of transparency. Number two, and this is a serious one, it would alter traditional banking systems and methods. And that goes back to what I was just saying, right? Think about it. What happens if Bitcoin take off and it shoot from 20,000 in 3 weeks, from 2 weeks, 20,000 or 100,000? And everybody that invested in Bitcoin comes in there and say, hey, you know what? I'm going to cash out like they do in the stock market. Hell, when they make too many trades on the stock market, it's shut down. It has shut the whole stock part down. How everybody going to get? That's like everybody going and saying the value of the dollar and jump 100%, and everybody runs to the bank at one time and say, hey, I want to get my money out. That's not even going to happen. So what do you think it would be with Bitcoin? And then they had to all have new kind of paperwork and regulations dealing with that. And like I said, Bitcoin is not regulated. It's too much of a headache. And then banks can't even pay the money out. They wouldn't even be able to pay it out. And it would just be a logistical nightmare and a financial nightmare, and it would just be bad for everybody. And you know how banks are. Banks, and this is not, defending banks, because the next point I'm going to bring up, it shows you how crazy banks are too. But yeah, that right there, it would be impossible. It'd be a logistical nightmare, and there'd be lawsuits and all kind of stuff, and then, scam and all that. But yeah. And like I said, what happens if it's an outflow of deposits? People want the money all at one time because Bitcoin spikes. Then, think about this: lending companies, like Lending Tree and all those companies that are non-banks. You think they're going to want to deal with Bitcoin? No, they're not big like a bank. They're not going to be able to fill the orders. They're not even going to. They might not, or not even want to deal with lending money to people with Bitcoin. What if they lend you money in Bitcoin, right? A certain amount of money. Say, I don't know, I don't know what Bitcoin is right now. Look, but say Bitcoin is 20 grand. You're like, oh, I need 20 grand. They're like, all right, we give you one Bitcoin worth of we give you one Bitcoin. So that's your loan, one Bitcoin, $20,000, right? What if Bitcoin shoots up? If not even shoots up, right after they give it to you and you go out the next day, it tanks 50%. Do you pay them back 10% because that's what Bitcoin is worth? Or do you pay them the whole 20%, $20,000? Now you as the lender, you're like, hold up, man. It ain't even worth all that. It never happened. This is stuff like a lot of people don't think about. They just think about the Bitcoin and, oh, the bank don't want the Bitcoin. Economically, it'd be a problem. And nobody really talks about this. I just had to sit and think about it. And I was writing all this stuff down. They're not going to want to deal with borrowers. These lending trees and these non-banks, these lending companies, it would be hell on them. They would go out of business. It would be really bad, And so it's like, you got to look at it from a standpoint of, it's not even going to be worth the problem. I mean, maybe I'm missing something. You guys might know something more about me, but I mean, this right here, it would be a nightmare. And then there's the point I wanted to bring up. And this is the most important point. It would disrupt the whole fractional reserve banking system. Now, I don't know if you know what fractional reserve banking is. Fractional reserve banking is this. When you put your money in the bank takes the money and they give you a receipt. Say you put $100 in the bank. You get the receipt of deposit, certificate of deposit. Boom. I mean, not certificate of deposit. You get the receipt of deposit. Here, boom. You put $100 in the bank. So you sit there and you say, oh, I got $100 in the bank. In actuality, you might have $10 in there because the bank can take up to 90% of that $100 that you put in there, and the $100. And what happens is, with the $100, you got what's called a required reserve. So now you got the deposit, which is the deposit is $100. The required reserve, meaning you can only have 10% of what you put in the bank is only required to be physically in your account. Meaning if you put $100 in there, you'll get a receipt that say you got $100 in there, but under the banking infrastructure, you only got $10. What happens to the 90? Here's where it gets crazy. Now you got what's called excessive reserve. Excessive reserve is the bank, the money takes from you, from that 100, that 90, and then it goes back into the financial highway, and then it goes to borrowing money. So they send it to lenders. So you're sitting here with a piece of paper that say you got $100 in there, right? But in reality, you got 10. So the bank just basically pull money out of thin air and give it to somebody else. But it's your money. And they're doing this multiple times a day. That's just $100. What if you had 10 grand? 9,000 dollars that money to go on to the bank, and it goes. You see what I'm saying? So it's a lot of things. You can't do that with Bitcoin because Bitcoin is not a physical thing, number one. And $20,000, you put a Bitcoin in there at 20 grand. I don't know why I keep saying 20,000 for Bitcoin. You put a Bitcoin in there for 20,000. You know what I mean? And then $2,000 is in your account. They can't break a Bitcoin down because it's not real. I mean, the money's physical, and it's a way they move and maneuver the money. But with Bitcoin, it would be a problem. How are you going to stop fraud? Now you're dealing with Bitcoin and all this stuff. So you're dealing with a different type of software and all that stuff. Man, you don't think they would have fraud and they would have hackers in there too? Russian hackers and all these other hackers all around the country still trying to tap into banks. And hell, I mean, yesterday, somebody took $200 out my account. It would be crazy with Bitcoin, and that's number 3. It would be a problem. And then, let me say this. JP Morgan, and I think it was, and I should know this, Goldman Sachs, they invested in Bitcoin and gave some to hedge fund owners or something. I think they sold out. They bought some Bitcoin, they sold out, right? Think about this. They know the risk of anything, especially JP Morgan. That's one of the best banks in the world. Goldman Sachs is too. They know that dealing with that will have certain type of risk. So they already got logistical people in control. And what they did is they got the coin and they gave it out. Let people invest in it. Cool. But think about this. You don't think they had a whole bunch of paperwork that was minimizing the risk of the bank giving them that Bitcoin? They probably didn't even read it, because the bank, the papers that they give you, it'd be like fine print. You can't even see it with a magnifying glass. It'd be so small. And that'd be the important stuff. I bet you they had like 30, 50 pages of fine print to sign off. Because you got to know, banks are always in it and always out of it at the same time. You see what I'm saying? Like, oh, you want it? We got it. Yeah. Come to us anytime you need it. Sign here and here and here and here. And then when you get bad, something go wrong, you go back to the bank. Did you read the paper? Like in the cartoons back in the day, did you read fine print? You like, nah. They're going to get you out of there. They're not going to deal with it. But yeah, banks, they want to make as much money without taking risks. Bitcoin is too much of a risk. Let me see what else I got on here. Oh, here we go. Here's the last point. It would be a compliance nightmare. And what I mean by compliance nightmare, trying to verify all these different accounts and unverified people putting the money in and taking it out, the fraud aspect, it would be hell. And if they got caught, they would be paying fines in the billions all the time. It would disrupt the whole banking thing. And like I said, banks ain't going to take risks. It's too much. That's like using a blowtorch near a 5-gallon gas container. Ain't nobody going to mess with that. So it's like that's we're going to leave it at that. But yeah, now me personally, like I said, I don't have nothing Bitcoin. I don't understand, the mania over it. But I mean, I wouldn't invest in it. Not saying that you should. Okay, so let's get that straight. I'm not a financial advisor. I'm just a guy that like talking about, money, stock market, and things like that. But yeah, dealing with this, I would rather put my money in a bank. Because I think about it, Bitcoin is, I'm gonna say 30,000. I don't want to say 20,000 no more. $30,000. You know how many shares of Bank of America you can get at a good PE ratio? What about Citibank? They got a low PE ratio. You would double your money back real quick, and they got a good dividend. You take that $20,000 or $30,000 instead of putting it in an inanimate object that you might not even be here tomorrow. Leasing the bank, you are a part of the financial network, and all you would do is just have the dividends grow. So you can get the Bitcoin. Say you got the Bitcoin at $20,000, and we had the sink like we have it now with the economy and everything. No, you got it at 50,000, I think it was before it fell. And it's falling, 40,000. You're like, oh, it's going to come back up, 30,000. Time going, oh, it's going to come back up, 20,000. Oh, now you're sweating bullets. But if you had the money in a bank stock, Wells Fargo, Bank of America, JP Morgan Chase, Citigroup, you would understand it's going down, but you got to understand they're raising interest rates, which is good for the banks. So it would have been a win-win for you coming up, because you could have been adding more shares as the shares falling. And now, once this bull market run, everything gonna take off. Every stock gonna take off. Boom, you'll be right in the thick of it. It's not that hard. You just want to put your money in stocks that you think gonna be here tomorrow. And Bitcoin, I don't think it's gonna be here. And it's just my opinion. But I mean, that's just what I had today, guys. And with that, I'd like to, in closing, say, man, I appreciate you guys watching my videos. If you could, drop me a like, a comment, and subscribe. It's been a pleasure talking to you guys today. And thank you so much again. I'll see you in the next video.